Retailers are stocking up for their biggest season, but inventories aren't keeping pace with demand, and that gap could reshape holiday pricing. Welcome to the Commercial Pulse update for November 11th, 2025. The Experian Commercial Pulse report is a bi-weekly snapshot of the US economy and what it means for small businesses across the country. Inflation rose to 3% in September from 2.9% in August, the highest rate since January. Core inflation, excluding food and energy, held at 3%. On the employment front, we saw a moderate rebound with 42,000 jobs added in October, according to ADP, a welcome turnaround after September's losses. However, business optimism dipped slightly to 98.8 in September, ending 3 consecutive months of gains. Consumer sentiment continued its slide, falling to 53.6 in October, 24% below last year's level. The Experian Small Business Index tells a more encouraging story. The national score climbed to 41.1 in September, up 3.7 points from the previous month, and that's the second straight monthly increase, though we're still 3.8 points below last year's level. Three key forces are shaping this trajectory. First, the Federal Reserve's late October rate cut is providing short-term relief for borrowers. Second, strong new business formation continues supporting local level growth. And third, while food and rent inflation remained stable, rising energy costs are adding pressure to operating budgets. The picture? A cautiously improving small business environment, showing underlying resilience despite macroeconomic headwinds. Now, let's turn to this week's focus, the retail sector, as it enters the most critical quarter of the year. Retail sales grew 5% year over year in August, accelerating from 4.1% in July. Month over month, sales rose 0.6% or 0.7% when you strip out autos and gas. But momentum is shifting. National Retail Federation data shows most retail categories experienced reduced activity from August to September as consumers pulled back spending, likely saving firepower for the holidays. And despite this pullback, holiday expectations remain robust. The National Retail Federation's October Holiday Consumer Survey reveals consumers planned the second highest holiday spending on record this year, with gifts, food, and seasonal items leading the way. Here's the concern: supply. Retail inventories aren't keeping pace with rising sales, and this tightening inventory to sales ratio suggests potential upward pricing pressure across retail categories as holiday demand accelerates. On the credit side, we're seeing mixed signals. Average monthly commercial credit inquiries from retailers remain below pre-pandemic levels, but they've surged 40% over the past 2 years. The retail share of new credit originations has held steady at around 2% over the past year. Average loan amounts have also rebounded, climbing back above $30,000 since April after an earlier dip. However, discretionary retail sectors are struggling. Apparel, department stores, and hobby shops have seen declining commercial credit inquiries, with department stores down 58% since 2019. The silver lining? Credit scores in these sectors remain stable and risk appears well managed even as activity levels fluctuate. And there's much more on the retail sector in the full report, so please subscribe. If you found this update valuable, explore more at our Commercial Insights Hub and subscribe to our YouTube channel. And if this video sparked ideas about how insights on small business like this can drive your business forward, reach out to your Experian account team to start a conversation. Last, remember to keep informed, to stay ahead, and we'll catch you on the next one.